Hello everybody, in this video I'm just going to be doing a really brief analysis on the ARK Next Generation Internet ETF, which I think is a really interesting one and has a really great return from a long-term growth perspective, as well as from the last year. I like to start off by taking a look at the 5-year chart to get a longer-term growth perspective on the stock, or in this case the ETF. And as you can see here, they're up over 430% in the last 5 years, which is relatively unheard of for an ETF, and I think that's really, really great. And if you look, even for the last year, it's up over 135%, and then the stock dipped down to a little over $40 in March, on March 18th or 23rd, whatever day it was when the overall market was at its lowest, and it's already back up to $118. So if you'd invested just in March, you'd already be seeing a 3x return, and this is on an ETF, which is pretty incredible for such a short time period. And next up, and most importantly, I wanted to share their top 10 holdings here on Yahoo Finance. You can see it's holding about 10.5% of its assets in Tesla. And you may be thinking, Internet of Things, what does that have to do with Tesla? And Tesla is really more of a technology company than a car company, and there's a lot better arguments out there than what I'm going to be able to say, but just everything they're doing with their computer in the car compared to all other auto manufacturers is just next level. And then there's also Square, which has done incredible in the last year and has really blown up, and they're really focused on point of sale solutions and innovating in a really new way. And you may be saying, oh, well, this ETF's just dragged up by Tesla and Square, but even if you combined the percentage assets in both of those, you get just 17%, so still less than a fifth of the overall percentage of assets. And then you've also got Roku, which is leading in the industry with streaming with their hardware. And then you've also got a couple of companies you probably haven't heard of. A couple down, you have 2U Inc., which is an education technology company based in China. So a little bit out there, probably one you haven't heard of or probably don't know much about. And then there's also CLTD, another Chinese company, a Chinese streaming company, which, to be honest, I don't even know a ton about that one, but I'm sure they're going to do really well, and they're innovating in China. And then there's Zillow, they're innovating with their algorithms, and Spotify, which is doing extremely well. I've made a video on them. I'm really excited about Joe Rogan joining their team. I'm a huge fan of his. Slack's doing a ton to innovate, even though they're really not doing too well with their revenues. And then lastly, the one I wanted to talk about is Facebook. I actually don't see them doing a ton of innovation or being kind of next generation internet unless they keep acquiring other companies. I see just the Facebook platform, not including Instagram or anything else, as kind of on a decline. The younger generations are not making Facebook profiles, so I think they're really slowing growth in most of their markets. But I could definitely be wrong there. And I also just wanted to touch on a few things here. Their net assets are just $2.4 billion, which is relatively small compared to a lot of their peers, but they're growing really fast. So I think in just a few years, they're going to be competing with the big dogs. And then their year-to-date return, I've already talked about how they have really great returns, but just year-to-date, it's 95%. So really, really incredible. And then the last thing is they're an actively managed fund, which means they're actively buying into and selling out of stocks. And it's 0.76%, which is relatively common. It's actually really kind of low for an actively managed fund. It can go up as high to just shy of 1%. So this is actually relatively low. And then for a non-actively managed fund, it'd be really close to 0%. It could be as low as 0.02%. The difference between it being, 0.02% and 0.76% would make a difference over time, but there are definitely benefits for it to be actively managed, and for these returns, I'd say it's definitely worth it. And lastly, I just wanted to share my own position in ARK, and this is actually not in next generation internet, but it's invested into ARK Innovation, and innovation is a little bit more exciting to me than next generation internet, even though next generation internet has performed slightly better. But this one still has top holdings in Tesla, which is my favorite stock to talk about out there. But yeah, I have just an average cost of $86, which I invested in just about a month ago, and I'm already seeing a 19% return, which is pretty incredible. I make tons of other brief analysis videos like this one on my channel, so be sure to come and check it out if you are interested in them. Subscribe for more content, and thank you so much for watching to the end.